All right, welcome everybody to Stock Analysis Friday. We're going to be getting started here in a couple minutes. Let me quickly do an audio check just to make sure everything is working on the audio end. So let me know in the comments area if you can hear me okay. All right, welcome everybody to Stock Analysis Friday. Hey, listen, have a great July 4th. That's coming up next week. Want to wish everybody a great one and a safe travels. Today, of course, is June 30th, 2023. All right, so listen, I got a few introductory things, administrational things to go through here. And why I do that, go ahead and type in the symbol, stock symbols or ETF symbols you want me to look up today, and do that in the comments area. And just type those in caps for us, okay? It makes it a lot easier for us to read that way. And you can go ahead and start to do that now. All right, hopefully the audio is good. If you lose the audio or if it gets garbled or the video starts to have problems, let us know in the comments area, because a lot of times, I'll be talking and I won't even know there's a problem until you guys let me know. So definitely keep an eye on that. All right, let me quickly go through these administrational items here. Give me 1 second. First thing I want to talk about, of course, are the risks involved in trading. There are risks, like I always say, without that risk, there is no opportunity. So the two really go hand in hand. But you need to be aware that there are risks in trading the financial markets. Nothing is guaranteed, okay? We deal in a realm of probabilities. And so what you want to do is try to find a approach where you're entering and exit the markets with an edge. And that's one of the things we do here with Applied Reality Trading and at traderscoach.com. We've been coaching students now for over, 20, gosh, how many years now? 25 years. And all over the world, we coach people from Australia, United Kingdom, Europe, you name it. Okay. And had a lot of success with it. And a lot of our students have gone on to create their own websites as well, involved in the trading arena. So always happy to hear that. All right, so a couple more things on the risks in trading. Past performance does not guarantee future performance. And also keep in mind that you may want to check with your financial advisor. We suggest doing that before taking any trades to make sure these trades that we go over today are suitable for you. We don't know your personal situation, they do. And there's a lot of factors that can go in to determine whether a trade is suitable for you. Things like your age, your association to risk, and so forth. And then finally, if you need help with risk control on each and every trade, we can do that. I have a number of books on that. You do want to be trading with money you can afford to risk, called Risk Capital. My newest book, called The Art of Trading, due out later this year, is going to be a really excellent book. We're putting the final touches on it now. A lot of new material since our first one came out in 2008. So you may want to check that out for sure. We're going to be looking at charts using my proprietary software called the ARC trading system, or applied reality trading. It covers entries and exits. We have software for scanners. We're not going to be using those today, but that is exactly how we find all the trades that we trade on the MORE report, which is our market opportunity report, which is a weekly report on stock opportunities. And then finally, we have risk control software as well. So we kind of try to cover all the major bases with our software tools, and that is why we call it the ultimate trading system. And then finally, like, share, and subscribe. Give us a like. Okay, we really appreciate that. Apparently that helps the channel according to the YouTube stats. And so I guess good idea to do that. All right, let's jump in and take a look at charts. Now, I see some symbols coming in, which is great. Okay, Jim, I'll get to yours in just a minute. And what I want to cover here first, really quickly, is Amazon. You know, we've been recommending Amazon here for quite some time. And as you can see, it's doing really well. It's probably due for a pullback pretty soon, I would think. You know, it's getting up basically in March. Since March, it's been going up like a rocket. And so it's not unusual to see a little profit taking at some point. So we're kind of due for that. Notice here these pyramid trading points. This is part of the ARC system tracking the trend and giving you entries. The exits are always placed under the pyramid's flat part of the triangle. And basically, a pyramid is a pattern that forms in the market. And our software looks for basic momentum characteristics in that pattern. And so that is how it works. And it's done an excellent job on Amazon. Got you in early back in the basically the end of March, and you've been able to track it right on up. So super job with the ARC software there. The stop is roughly right under this area here. So if you're trading Amazon and you want to take profits on this first leg up that we've experienced, I'd put your stop at 123.84, 123.84. And that should protect you in case we get a pullback. So beware of that. Pullback will probably put you in around the low 100s, okay, around 115 to 104. So that may be quite enough of a pullback that you don't want to endure that. We do think the ultimate target for Amazon is going to be around 195 to 265. But again, it'll be, markets don't go straight up forever. They zigzag. So those zigzags are part of the profit taking before the trend resumes. So we're kind of due for that. But in terms of a long-term position, I think it's got quite a few legs to go on. All right, Jim, let me get to CCL for you, Carnival Corp. Let's take a look at this bad boy and see. So we've looked at this before, and it definitely is breaking out at this point. So when we looked at it a while ago, we had this red PTF, and then in June, it turned green. So that triggered an entry back in June on this, okay? It cleared here, okay, which kind of solidifies that it's a breakout. And so I think that's kind of what we're in now, Jim. So you want to hold this. Now, notice some of the indicators at the bottom here on the multiple time frames that we look at. So this is the daily time frame. This is the 60-minute. And of course, this is the weekly. And we kind of load our software on all these different time frames to give us an idea of the short, intermediate, and long-term aspects of the symbol we're looking at. And notice here, all right, you've got clean pyramids here and here. You've got a bullish owl. This is the owl, which stands for the optimum wave locator. And that I created to measure momentum and help us with Elliott wave count. Then under that, we got the PTF, which is the precision trend filter, which basically measures momentum at certain peaks or troughs in the market to give us a clue if that particular peak or trough is a major bottom or not. And so if you look at this here, we've got a yellow or neutral, so that's okay. We've got green over here, so we're going to make more highs on that, and green here, so more highs are coming. So you kind of want to stay long on this. I would put my stop, depending on how you want to play this, I would put it either under this pyramid here, which is a low at 1390. So you want to go one tick under that at 1389 and keep it there, because that should give you enough leeway to keep you in the trend, even if there's a little profit taking. So I'm liking that. Looks real good. I think I'll put that on the recommended list, CCL. Now, I do think CCL, all right, we might have a situation where, let's take a look here and see, you know, we go back to not too much history, 2019, but we had a bottom here, which really was an all-time low. All right, so we may either be getting into a bigger trend at this point to the upside, or we could, at the very worst scenario here, probably be going up to about $30 to $45. Still enough profit to make the trade worthwhile. And then you're going to have to watch it if it hits that target zone. So that's a go. All right, CCL. All right, Stuart, how are you this morning? VC. Let's take a look at VC, Verizon. All right, give that a second to load here. All right, here's VC. So VC, and let me move this thing down here, 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 and here. Okay, so VC came down and has been coming down for quite some time. Now, we've got a pyramid trading point entry here, but I want to alert you to something here, and that's the red PTF on the shorter time frame. I would hold off going long on this because of that indication. I would wait for that either to go yellow or turn green. So I'm a little hesitant about getting in here, but I do see the potential of getting in for a potential move to the upside, even if it's just profit taking. There may be enough profit in that profit taking to do a long trade at this point or soon at it. But I'm not going to go against the red PTF on the 60-minute time frame. So I wouldn't do that at this particular point. I'd wait for that thing to confirm a movement to the upside. All right, good. All right, let's see what else we got cooking here. I see the stocks coming in, so give me 1 second. All right, ADM. ADM. Let's take a look at Archer Daniels. All right, so let's see what we got here. All right, very similar situation, except this one actually looks a little better to me in some aspects, because at this particular point, we don't have any red PTFs on any of the time frames. Now, a couple things. What I'm concerned about here is we have been in a correction on the weekly chart. You can see that magnified over here. We want to kind of see if that correction is actually over, because usually 70% of the time they hit this target zone, and you can see it hit it. So that's a good sign. But on this time frame here, it has not turned around yet. Okay, it's starting to turn around a little bit better on this time frame. This is kind of messy over here. So we've got a pyramid trading point that's blue. Do you see that forming right there? It's a bullish one. We've had all these beautiful down ones here, and now we're getting a possible bullish. It's blue because it is not confirmed until prices go over the point of the pyramid. And so that would be your entry on this. Now, because the owl over here is still red, it's very possible we could have a little pull up and then another movement down deeper into the wave 4, for example, for Elliott wave, or a retracement for everybody else. The retracement may not be over. Okay, we could get a little blip up and then another move down. So you got to be a little careful on this one. It's a little more chancy to go long here. So what I do is when I have this red over here, but I have a green pyramid, if this gets hit here, and this is green, no red here, no red here, I can get an early entry there. But I have to do it with a smaller trade size because I'm going against the weekly time frames owl. So I'm going to put this as a potential. I can't recommend it right now as a actual entry because the pyramid on the daily chart is still unconfirmed, being a blue color. All right, let's take a look at Z here. Give that a second to load there. Okay, so this is one we looked at before, and we were thinking, okay, we're going to have some type of retracement. And so, you know, because it's been going up for so long, and we have bearish divergence here. Okay, so basically at this particular point, we're probably due for some type of pullback. And it's kind of been a tough trade on this chart. You really have to give it a lot of room. Look at the volatility. So the best time frame would either be the 60-minute or even the weekly chart. Okay, so that would be okay at that particular point. Now, I'm going to remove this here, and I'm going to draw in a potential target zone here. Potential. And somewhere along in there. So maybe 94 to 133. So you could almost double your money here on this one. The problem is where are you going to put your stop? Because you'd have to put it low enough to keep you in this trade during any significant profit taking. And you could get a pull down to 40 on this thing before it resumes at some point. So I would use an option on that. So I would put Z down as a buy using an option. And you can just use a simple long-term call option on that market, even a leap if you had to. But make sure you control your risk control by only buying enough of the option that you can afford to risk. Okay, so that's kind of the way I would do that. So I like to use options if the stop is so far away that I can't get a decent trade size. And so that fits the billet on this one. APP is our next one. Okay, APP looking good as well. All right, now this one I like, and I like this one a lot. So right away, I'm just going to put this on the recommended list. So, you know, when you have the right tools, whatever tools you use, you should be able to make a decision whether you should be long, short, or out of the market in about 20 seconds. And the reason for that is A, if you've used the tools enough, you've mastered them. And so all the checklists and all the connecting of the dots is done instantaneously in your mind. And that's where you want to be as a trader. So when you look at this real quickly across all three time frames, basically green, 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 no red currently, right? Pretty clear movement off the bottom. That's clarity. All right. And then now the next thing you have to worry about is where's the target zone? That's the final thing. So let's put a fib retracement in here. Okay. And you've got a target between 42 and 64, and we're sitting at 26. I'm liking that. Okay. I am liking that. All right. Now, the next thing you got to worry about is where are you going to put your stop, right? Okay. So you got a gap here, and then it took off and never filled the gap. Notice it had a gap here and filled it. So you could use an option again on this one. All right. Probably not a bad idea because it is pretty volatile. But at the very least, your stop probably needs to go under this pyramid here at 2294. If you want to be a little more conservative, put it under 2104, so 21.03, and keep it there. All right. So that's kind of what I'm recommending on this. And you could use a call option on this. So APP is a go. LITE is our next one, Litecoin. And give that a second to load. Good picks today, Stuart. Good picks. All right, let's take a look at this. All right, so looks good on the daily, looks good on the 60-minute. We still got a slight red owl here, but we've taken out the down pyramid, so there's no longer a short trade there, even though you could have done really well on that. But now what's going on? Well, now it's in an uptrend, okay? And I like this one. I actually like this one. I cut the trade size back a little bit, but I think this is going to go green. You've got green here and green here on the PTF. So I think you could take a full trade size because if you have a, this indicator is 75% probability. So chances are we're going above 65, probably into the 70s at the very least, very quickly on this. Probably in the next week, 2 weeks to 3 weeks, I'd say, based on that indicator on the shorter time frames. So that'll be enough to turn that owl on the weekly green. Okay, so I would go ahead and put in a full trade size on this. Retracements here, let's take a look and see where we could have a quick target. All right, so you're a little bit close to the target here on this, and that's a little bit concerning on that one. So you'd have to put your stop fairly close to have the risk to reward. So I would put the stop right under 54.64. All right, 54.64 on this one. So LITE is an okay one for this week, but you know, you got to be careful on this one because you could get some profit taking and get stopped out, but it also could move right directly up because the 60-minute is so bullish as well. So I'll leave that up to you. You could also do an option on that. So LITE is going in the right direction. All right, so let's see. All right, so Gene is asking me what time frames are my 3 charts. So I've got the 60-minute up here. All right, I've got the daily here, and I've got the weekly here. And this is the long-term look, the intermediate term look, and the short-term look. Okay, right there. So that's how we kind of do it. When we bring up a symbol, it's the same symbol across all 3 time frames. And that's called multiple time frame analysis. I use it because it really is excellent, okay, for this type of presentation. All right, so let me see if we are A-okay on the audio still and the video. Got a little bit of Sergio says freeze action. So it looks like we may have the video frozen. Let's see if it's on his end or my end. How are you guys doing out there with it? Okay. I'll assume everything is good unless I hear back from you. Okay. So, all right, let's take a look, Sergio, at yours, CCJ here. Okay, everybody says everything is A-okay. All right, so Sergio, if you can hear me, but you're frozen, why don't you log out and log back into the room, okay? You should be okay, however. All right, so it's been this stock, CCJ, has been in an uptrend for quite some time, all right? We had predicted a pullback here, okay? We looked at it before, and now we're bouncing off that level. So that's probably a good sign. A lot of volatility, okay? Take a look at that daily chart. If you tried to place your stop accordingly, basically what you'd be doing is trading these little moves up. So pyramid entry here, exit here, profit. Pyramid entry here, it's going to keep you busy, but the pyramids did an outstanding job of taking profits out of these little swings. However, okay, that is a pretty volatile, messy, back and forth type of market. You'd probably be better off in that market using the trend line for your stop. Okay, just so you know. All right, so keep that in mind. Now, you've had a number of pyramids in a row in this upswing here, and look at the weekly chart. Got a little bearish divergence. I think you're probably going to make one more high. I think if you were going to trade this, I'd use the 60-minute chart. And basically what I would do here is draw your fib extensions here. And you're probably looking at a target of 33.40 to 35.95 using the 60-minute chart. Okay. And then that may be the last high you see on this for a while. All right. I'm not going to recommend it, but that is how I see that one. All right, let's keep going here. Give me 1 second. All right, SMH is the other one you'd like to look at. And this again is for Sergio. Give that a second to load here. All right, so we hit an area here. We had the retracement, and now we're going up into this area here. So let's redraw this. Let me remove this. Let me remove this. And let's see what's kind of going on with this thing. So we got a nice movement coming up here. We got a green PTF, green PTF. There's really no reason not to be in this right now. I think hopefully you have been in it for a while. Let's try to figure out where the target is going to be on this. And I am thinking probably I'm going to draw an extension here to here to here. So we're kind of getting close to the target of 156 to 199. We're at 152. So we're too close to the target for me to recommend this for everybody. But if you're in it, you kind of just want to stay in it, have your stop under this particular pyramid here. So your stop currently should be under 142.98, so 142.97. And then if this pyramid that is blue turns green, you want to move your trail, your stop up under that one as well. Okay, to lock in a little more profit. So there you have it. All right, good, excellent. All right, let's see. Let's keep going here. All right, Alexander, how are you? Okay, DV. Let's do DV for you today. Okay, DVRI, I think, DVRI, or and that is coming up right now. It's a mid-cap stock. Not a lot of history on this bad boy. Okay, we only go back to about what, 2021, I'd say, on that. So Elliott Wave, not much help really, except that's a pretty strong owl we have on the weekly chart. We've had a big move up on the 60-minute chart here. So again, here's the problem. All right, I think you're kind of getting close to a pullback on this. Now, let me just ask you a question. And I think this will be obvious. Is it better to get in here when everything was green down here, or here? Which is more risky, one or two? Two, right? And so if you're in it here, if you go in it here, the problem is if you get any profit taking, you're going to get stopped out. All right. So I would hold off on this, wait for the retracement, and then take a look at it again. Okay. And that is DV. ARCO. Let's take a look at that one. Give that one just a quick second to load there. And Alexander, you may be already in these. Okay. And that would be fine if you are, but if you're not, getting in late is just usually kind of a dangerous thing to do because the trade is more risky. So you got bearish divergence here, you've got this uptrend here, and here again, same thing. Is it better to get in here or here? Okay, this is more risky than this. So I always try to get in when I see a bottom, okay, turn into a new trend. That's what I kind of like to do. So I would not do this one either. All right. V. We've looked up Z. Now we're going to look up V. All right. Give that a second to load. Okay. So here we are here on this one. And we expected it to pop up a little bit higher here. Let's remove some of these things. Get a little confusing after a while. All right. So okay. So I don't know why I had all these things drawn on here. We must have looked at this a while ago, right? All right, let me just remove all those. Okay, so let's take a look at the weekly chart on this and see what we've got cooking. So again, big move up all the way back from 2009. And now you've got this situation here. All right, so it looks like it kind of makes one more high, right? My only problem with this one here is it didn't really pull back that much. Let's just see. So it didn't hit the high probability retracement zone. So that is a little concerning. So when you're faced with something like this, here's the problem. You can take the pyramid trading point and go long, but there's also a chance that this is still in a wave 4 and could end down here. That's the problem. So one of my dots that I connect, if I'm seeing a trend that's already huge, okay, here again, is it more risky to get in here or here? Okay. So once you're in here, I'm expecting this to retrace down here, and it didn't do it. So I would not go in it because this could fail and come down here. Yeah, you may get one more high. Okay, if you do, you're going to miss the trade. But that type of analysis, more often than not, gives me an edge in the market. So I would not take this trade. All right, let's keep going on here. PGR. PGR. Give that a second to load. All right, again, weekly chart. Boy, this has been going up for quite some time. Beautiful trade using the pyramids way back in 2015-ish, but now it's coming down. So now we got a situation where this is red. We're seeing a break here, kind of messy, sloppy. So again, not an easy trend to trade on the daily chart. Much easier on the weekly chart than the daily. Even this is a messy one here. So this is your best time frame because your stops are going to be far enough away on the weekly time frame not to whipsaw you around so much. I think it's going into a correction at this particular point. Now, do you want to short it? You could. All right. That may be the better trade here. So if you're into shorting, let's see where the possibilities could be for a short trade. Let's open this up. You don't want to go long, that's for sure. But on a short trade here, this could be a major short roughly. So you're probably looking for 104 to 76 and you're at 132. So I would put this, and you do have a pyramid here, okay, on the daily. So let's put this down as a short. PGR, this is a short trade. And this is when you could take now, and you'd want to put your stop. I would put your stop as high as you can on the second pyramid. And I would put the stop at 138.91. Okay. So that's where I would put that one. And that's a go for a short trade. All right. Let's take a look at ENPH. Another one you're watching. Okay. ENPH. All right. ENPH, great company overall. We installed at my house here, we installed their 210 kilowatt battery system with solar at our house here, and we love it. Great system. We don't pay an electric bill, basically. All right, so let's see what we got here. All right, so looks like ENPH is coming down. All right, so we've got a situation where a red owl here, a red PTF and a red owl rather. All right, so basically it's come down quite a bit. All right, so kind of, in its area. Here's it, the wave 3 here. So wave 4, I would say this could be a good long trade in a little while, but not now. Okay, and it's too late to short it because it's already in the target zone, but it's still unwinding. So another low according to the PTF on the daily chart. Okay. All right, let's move on here. MARA. Let's see what's cooking on that bad boy. Give that a second to load. And we just adjust these. You can see a lot of the price here. All right. So we looked at this before, and we're expecting a bounce up to 33.53 to 52.76. All right. I think we had this as a buy back in here. All right. But you still got enough room for up here. You got to set your stop low. Do not set it any closer than here. Okay, so your stop needs to be right under this cluster of support here. So I would use this low in the support cluster of 846. All right, so MARA, if you're not already in it, is still a buy, but you got to have your stop deep. Okay. All right, GBTC. Now, GBTC is one that we've been recommending for a long time. It is the ETF for Bitcoin. And GBTC bounced off a support area, pretty textbook, came right down to this area. We were kind of wondering when it was going to bounce, and boom, it bounced. So we think right now we've got two targets for this. One target is if this is a intermediate bottom and not a major bottom, then the target's going to be 25.86 to 37.07 using a fib retracement on the weekly chart representing profit taking from short positions. The other target bases this off a major bottom, and if that's the case, we're going to just keep on going up. And that is the scenario I think is going to occur in Bitcoin. I also think the overall market itself will sell off big time. going into 2024, probably somewhere in the end of fall here, starting. And I think Bitcoin, you're going to find, actually goes up when the market goes down, the stock market goes down. So I think Bitcoin is kind of, and the currencies in general, they're here to stay. They're not going to go away. But it's very similar to the dot-com era of the late 1990s, where you had the bubble, it sold off. We had the bubble, it sold off. Now the big boys who will survive that will flourish. And I think that's what you're going to see. And I think a lot of money is going to come out of equities and go into cryptos. And it's still, you still got to pick the right cryptos, but GBTC should be okay. And you should do fairly well on that. I think it might even siphon some of the money that usually goes into gold and silver and the metals during a sell-off. I think it's going to, a lot of that money may be coming back into the Bitcoin market. So I'm very bullish on Bitcoin for that reason. All right. But you know what? You'll always have to protect your downside in case we're wrong. Okay. So always use stops. But I like Bitcoin for a long position. Yeah, I think it looks good. You just got to put your stop low enough to survive any pullback. So you want to have your stop under here, all right, at 12.85. So let's put GBTC down as a buy, provided you're down there, assuming it's a major position. It's too close to the target zone for a retracement trade, but if you're going to look at this as a major bottom, you could buy it. There's no options on GBTC, so you're out of luck on that. I personally would buy this and just hold it, okay, as a long-term trade with a stop under a major level on the weekly chart. And that level is right there pretty much at this particular point at 12.85. All right, so those are those for you. All right, let's see. Okay, it looks like everything is working. Walt, how are you, Walt? All right, OSTK. OSTK. Let's see how that one is doing today. And these are live charts. So this has got the latest unraveling data. All right, big move up. Okay. Oh boy, this is a good one. All right. So notice here the move up broke all the levels. All right. So you had a pyramid entry down here. You had green here. Now you've got green here. This is yellow. Okay. Yellow, you can go long or short on a yellow. That's not a bad thing. But when it turns green, that indicates that this high here is not the final high. It's still moving up. And look at this. Look at this. That's indicating on the next trend up, we're going to go above 130. So we're at 30. You think that's a good trade? You betcha. All right. I got to tell you, Walt, I'm going to even think about taking that one myself. All right. OSTK. OSTK. I'm going to classify this, however, as a long-term hold, buy and hold. So one you can be in for years. And I would think probably getting above 130 at some point is where this thing is heading. So a major bottom probably has occurred here. Very close to going green here. This is green. This is green. This is green. This is green. The probabilities of this going green in the next week or two is high. All right. So kudos. That's the best trade of the day right there. Use a stop. You can place it under this pyramid here at 20.37. Okay. And use an option. You could buy a leap on this if you want to. Okay. So nice job on that one. All right. Anybody else? I think I got them all. Did I miss anybody? If I missed anybody, type them in now. Yep, OSTK, Gene, you're correct. It is the best one for today. Absolutely. All right, listen, you can feel free to type another one in. All right, here's gold. Good. GLD. Let's take a look at gold. This is the ETF for gold, of course. And gold, you know, hit a top here. And look, boom, it came back down. Now, long-term gold should go back up. into the target zone to 188 to 244. So I think basically we're going to have to wait until equities have hit some type of top. You know, they're still moving up, and you got July 4th. Statistically, right around holidays like July 4th, the market does good. The mood is good in the market. So not always, but most of the time. So you're seeing that now. So there's a lot of money still flowing into equities at this particular point, driving gold down a little bit. But again, gold should return back to the upside. Now, what's interesting about gold, I'm going to open up the chart here. This is the weekly chart, long-term chart. So back in 2011, you had a 3, okay? Then you had a 4. And this is the target for the 5, with the PTF saying wave 5 is not over. We're going to go higher into the target, right? So doesn't mean it can't keep coming down and do this and bounce around and then go up. That's certainly what seems to be happening a little bit right now, because it's coming back down. But it should go back up, but it probably will not go back up until equities show signs of weakness again. And they will. So it should go back up at some point. So I don't think I would buy this right now necessarily. I would wait for these lower time frames to be more bullish, meaning green here and green here. And, you know, you're right down at an inflection point between here and here. So we may see a turnaround pretty soon, but it's not quite there yet. All right. So just hang in there with that one. All right. So that's gold. Let's take a look at now. This is UNG is the ETF for natural gas. Now, we went long on natural gas, like natural gas, okay, issued a long buy on this as well from our market opportunity report. So this we are long on. We think at the very least, probably getting up to 16 to 22. And it's still a good time to buy it because you can get in and put your stop low enough under here. Now, UNG has a red PTF on the 60-minute time frame. So if you have our tools, I would hold off and wait for that to turn green. Should do it pretty soon if this is all it's going to do on the retracement. For the rest of us, you're getting a green here, all right, and you are going against this, so watch your trade size. A little bit lower on the trade size because you're going with that. So I'm going to put UNG down because I think it's in the process of moving up. All right, I'm going to put a little caveat. It's not my favorite. It's not as good as OSTK because some of the dots aren't connecting as well. But I do think there's an opportunity there to get in early at this point. So I'll put it down as a buy for everybody, okay? Just make sure you put your stop below that pyramid here on the daily chart. Let me open that bad boy up. So you want to put it right under there at 6.05, and it's at 7.38, okay? So keep that in mind. All right, let's see, good. Let me run over quickly. Let's take a look at some of our day trading time frames. So again, we use multiple time frame analysis, but we do the time frames differently when we day trade. So the chart in the far left is, believe it or not, a 15-second chart. So every price bar represents just 15 seconds of activity, and you can see here, all right, how the pyramids even work on these short time frames beautifully. And then you have a 1-minute chart over here, and this is the chart we trade, and basically you can see how well the uptrend in there, and then you got a pyramid down here, but a green PTF. So this is going to be a short term. This is going to be a pullback followed probably by more highs. So what I would do in a situation like this, I would have taken the long trade here. I would have possibly used the 60-minute chart here for trading the correction to the downside. This is the target. When it gets here, we cover our short trade, or we get stopped out on the pyramid if it reverses early, and then we go long back to the upside. All right. And we've got a green PTF on the 5-minute chart with a green owl. So this is probably a correction inside wave 3 on the 5-minute. So this should be over pretty soon and you can go long, but right now not. Okay, so it's still coming down. And that's kind of how we look at these intraday time frames like that. Okay, all right, let's go back to stocks here. Always fun to look at those. Day trading is a lot of fun, and we have a day trading room if you're interested in that type of thing. All right, I think that might be it for today. I don't see any more coming in. All right, everybody psyched up for July 4th? Woohoo! All right, if you are, whatever you're doing, just have a safe time, okay? Safe travels, good time. July 4th is one of my favorite holidays. Love summertime. And, who doesn't, right? So it's always a good time. All right, well, I think that's it for today. So you guys have a great week out there. What I'm going to do is I'm going to roll it back over to the MES and just keep it there so you guys can watch as we close the room out here. So what I will do is put a little music on. You can watch this, and then I'll close the room in about a few minutes, 5 minutes or something. All right. So have a good one, and see you next week. We'll be back next Friday. Have a good one. Bye-bye.